Good morning, good morning. All right, we're up and running. How's everybody this morning? Can you guys hear me okay? Streaming software was giving a little bit of an issue this morning. It seems to be working now. How's everybody doing? We should be okay. Okay, good. All right. Morning, good morning. How's everyone? Let's get this started. Can you guys see my screen? We got gold up. You see what gold is doing? Dropping down. Why is gold dropping down? Well, do you remember what we were looking at? We were looking at last week, gold. We were looking at this area here on the 4-hour chart. Just open this up. Remember this here we were looking at? This area of supply. Let me just draw it here. This area of supply here. Now, what was it that we were saying about this area of supply? We were saying that if this area of supply gets taken out by the banks, then they would start adding price up here. And if they took this out, then they would move price up here. Okay? But as we can see, this area of supply is being held. Okay? And we could have located this shift downwards on a lower time frame. We could have spotted whether or not the institutions were going to drop price or if they were going to continue price to the downside. So let's take a look at the price action here. Okay, so right away I have spotted a day trade right here. That was a day trade to get in right there. That was a nice 3-to-1 drop price. Okay, that was your first entry right there. A day trade off of that supply area. Now eventually it came up, came back, tested it again, dropped, and again, and back up. So it was consolidating there for some time before it eventually continued to the downside. Okay, as we can see. That supply. It's coming down. Now it's removed an area of demand, and it should head lower now towards that area on the 4-hour. Okay, at the same time, we mentioned this in the report that was sent out to members. The report was very specific about what we were expecting in the markets this week. So I'll switch over to the euro so we can have a look at that. Now, the move that we got last week was a move down towards an area of demand here on the weekly chart. Now, as you can see, this demand zone has not come into contact yet. So what is that telling us? That's telling us that institutional demand has not yet come into play here. All right? So if institutional demand has not come into play, then can we really be expecting price to start rallying up with any type of real strength? Probably not. Probably not. Okay? And if we look at the 4-hour chart and we enlarge this, we can see that price is now removing an area of demand here on the 4-hour chart. So it's opening up the floodgates for a bigger drop in price. So we could see this continue throughout this week. All right. Now I posted here a tweet with respect to the euro. Let's remember that traders got into long positions at the highs, okay, of 122, and they're only starting to get in shorts. So they're late to the game. 122s, right? Which was all the way up here. Retail traders were getting in long positions here, thinking that this move was going to continue to the upside. Now, that was very dangerous. There was a time where the institutions were building structures to the upside, but because of our analysis, we were able to determine that the structure to the upside was very weak and therefore not anything reliable. So if they're building structures to the upside, but those structures are not reliable, then that means we should be very careful in going into long positions on the euro, which we were. We got in, we exited, we didn't take any losses. In fact, there was a small profit that we took. But then we noticed that the momentum was shifting back to the downside, so we closed our positions. So now we've got a situation where we can easily see price continue to the downside. So I want us to be aware of that this week. Okay, I've already warned about trading the euro at this time. Okay, whether you go in long or short, it would have to be shorter term trades and not holding anything for long periods, because these moves to the downside, the moves to the upsides, they can be short-lived. Okay, expect that. All right, let's go back to gold and see what's going on here. So another thing we were talking about with respect to gold is that price action is not looking very good for continued move to the upside at this point. We got a situation where institutional demand has been contacted a few times, and price is failing to create the ascending structures that we would want to see built from these lows. So when they fail to create these structures, it leads us to suspect that likely price will go even lower. Okay, this is one of the reasons why we've been holding back on entering into long positions. Because if you'll notice, yes, we've gotten pushes to the upside. They've all been short-lived. Okay, considering the massive area of demand that we are responding to, we would suspect that price would continue much higher if they were to be building ascending structures. But that hasn't been the case. Okay, this last rally was quite nice, but it wasn't sustained. Okay, this rally was not sustained, and this is one of the reasons why we refrained from getting into long positions. Because I'm looking to get into a long position based on, midterm, long-term trends being to the upside. I want this sucker to go higher, a lot higher. If I'm going to invest into a long position, then I want price to do something like that. Okay? Because that will give me many opportunities to get in and many opportunities to profit. The larger the move to the upside, the more opportunities I have to open up multiple positions to the upside and to profit from those multiple positions. So far, we're not seeing that. We haven't received this. In all this price action, we haven't received what we would be looking for in order to get into long positions. So that's why we've been just waiting. Okay? And now, as things are playing out, it's not looking very good for continued move to the upside. Now, another chart we were talking about was the Aussie chart. Okay, so let me bring that up here. The Aussie chart, and we know that there are correlations between Aussie and gold. And so when examining the Aussie chart, this is the Aussie weekly chart. When we examine the supply and demand on this chart, we can see that the institutions created an area of demand here. Okay? And price came and contacted it once, twice, 3 times, and 4 times. You know, when price does this and comes down to an area of demand and contacts it so many times, what typically will happen is that this area will eventually break through like this. And the reason for that is, this area of demand contains buying orders. But if the buying from this area only brought price up to here the first time, and the second time it only brought it up to here, and the third time only brought it up to here, I mean, we're never surpassing these highs here. That's a problem. That means every time the institutions come in with buying, they're also coming in with selling and pushing price back down. So what are we supposed to suspect at this point? That they're going to use this area of demand to continue price higher? Well, we haven't seen proof of that. Okay, this is why I've always said that to be a good trader, you have to know how to investigate. You have to know how to think. You have to know how to think when it comes to trading. It's not just about specific chart formations and chart patterns, because the institutions will use those against you, right? Because they know what you're looking for. So they will physically manifest those chart patterns to lure traders into taking certain trades. So you can't think in those terms. You got to think about what is happening on the charts and why it's happening. What does it mean based on your experiences? It's just like life. To be successful in life, you have to live life, taking in new experiences and building up a knowledge base in your mind of what you know to be true. Certain things you might think you know to be true until you gather further evidence that supports something completely different. And you have to be open to allowing new information to come in. This is something that I wrote in the Aruja report this last weekend. Because one of the reasons why traders fail as traders is because they get this idea of what they think is going to take place with price because of what they are seeing. They look at the chart and what they're seeing is a lot of strong momentum to the upside. And so they say, well, there's a lot of strong momentum to the upside. It looks like it's going to go high. So maybe I should buy. And then they turn on the media and they turn on their analysts on TV, and they give all these recommendations and they give all this news, and they could be making it look like it's a very good opportunity to be buying the Aussie at highs like this. And so that is why you don't want to rely on what you're seeing, based on your conventional way of thinking about the markets, because the banks know what the conventional way of thinking about the markets is. They know about chart formations. They know about support and resistance. They know about all those things. They know about how the indicators work. So they're going to use that to lure people into getting trades that allow them to take off their positions. So when you're looking at the markets based on the reality of what is taking place, we can see that their institutional demand is being eaten up. So if institutional demand is being eaten up, is this something that you want to get into a long position based off of? Not a chance. Okay? Not a good idea. So we see strong evidence to support that we might get a drop down here into the low 70s. Okay? And if that does take place, we will likely see gold do the same thing. Okay, and again, going back to gold, what I was talking about with respect to gold is, we're not seeing any evidence to support that they're going to start buying and pushing price higher. So if we're not seeing any evidence to support that, then the contrary is likely going to take place. Okay, the evidence is building for a move to the downside. Okay. Kiwi was another one that is also very related to Aussie and gold. And we're seeing a similar scenario here. We got an area here of demand that's been holding, once tested, twice tested. But that first test brought price up here. And look at the weakness here, up and then straight back down. That's not institutional buying. If the institutions were buying, you would know it. I mean, I would know it. My students would know it. We would see it clearly, okay? Because we would be looking here at the daily chart, and we would be looking for the very strong buying from the banks coming off of this area. And so we're not seeing that. Instead, we're seeing areas not being able to be taken out, and we're seeing supply zones being created, causing price to drop, and movements up creating nothing, no momentum to the upside. This is very weak. Okay, this is very weak price action. So again, we might be seeing the beginning of a larger move to the downside like that. So it's early to tell. It's early to tell. There are no chart signals yet saying that that is what is taking place. But, from the evidence that I'm gathering, the lack of evidence to support a big, strong move to the upside is telling me that we're likely going to see drops in price. Okay? Make sense to you? Let me see, Evans. Wow, the way Kev approaches the market is at another level. Thanks again, Kev. Yeah, no problem. Yeah, it's well, it's like, it's nothing spectacular when you apply critical thinking and logic and research and data analysis and hard work, and you put all those ingredients together, it will bring you to a place where you can see things a lot clearer. It's the same thing that we've always talked about when it comes to even how you live life. Life is an experience from day one. When we're born into this planet, we're taught certain things, right? We watch our cartoons, we eat our breakfast, we watch commercials, then we go to school and then we're taught about the world, and we're given our history lessons, and we're taught about math and English and geography and all that sort of stuff, and some science. And then what we believe is that our minds are being set up to be winners in society, right? That's what we're thinking, is that these school systems are there to create the foundation for the rest of our lives, to make us smart, to make us intelligent, to make us understand what is taking place and how to think and what to think, where to focus our attention on. That is what we're thinking. We're thinking that our minds are being trained to be smart people, intellectual people. But the more you research our school systems and the education that we've received, and you compare it to the type of education that used to be given years ago, I mean, we're talking about over 100 years ago, the education has changed. Okay, we don't get access to the type of education that we used to get before. I've mentioned this so many times, and I will continue to mention this because it is so vital to understand. So you think about it. If traders were given the right education and taught the right way to think and the right way to be logical and the right way to collect data and the right way to work, do you think 95% of traders would fail? The answer is no. But then you think about the big banks that are controlling the markets. Do you think that they would want everybody to be trained the right way on how to think and how to learn? I don't think so. Why? Well, because then who's going to be taking the opposite trades that they take? Who's going to facilitate them making money? Right? So, applying the same principles that you would apply to life and applying them to the markets will open up a whole new realm of possibilities when it comes to trading. So that is basically been the approach that I've taken with the markets, and it's been extremely, extremely successful for me. And it's just incredible the accuracy, you know, when you're viewing the markets for what it really is, and you are able to think critically and logically about what is taking place in the markets. It's incredible just how accurate your analysis will become. You won't be suckered into the losing trades that most traders are being suckered into, and you'll know when the opportunities are right, and you'll be able to take advantage of them. All right. So that's what I'm seeing here in terms of gold. A lot of evidence to suggest a move lower. And again, this is very premature. This information that I'm giving to you is very premature. I mean, your typical trader would not be able to spot this. Okay, even your typical supply and demand trader that's been learning from our school, they wouldn't be able to spot this early in their learning. Okay, this is very advanced stuff that I'm sharing with you. Okay, it's coming to conclusions about what we know to be true about the markets. If you know that you need something to happen to support something, and that something is not happening, and time after time you constantly see it's not happening, then it's going to lead you to suspect that it's not going to happen. Okay, it's like, imagine you own a company, right? And you hire a guy to work for you, and you tell him that the start time is 9 o'clock, but he keeps on coming in late, right? 9:15, 9:30. You keep on giving him opportunities, and he keeps on telling you, "Oh, sorry, yeah, I'm gonna be on time the next day," and he keeps on showing up late. You know that he has yet to really prove himself that he's going to come on time. So you know that the possible conclusion is that he's going to end up being fired. He's not going to end up being the right person for the job. Okay, he hasn't been fired yet, and he hasn't done anything terrible yet. But you know, the outcome's likely not going to be good for him because he's not proving himself. He's not showing what he would need to show in order to uh, to be a good candidate for the job. It's the same thing with the markets. We're not seeing what we would want to see from the banks in order to know that they are going to continue pushing price higher with gold. So if we're seeing a lack of evidence to support it, then that suggests that it's likely not going to happen. All right. Could it happen? Sure. Could things turn around and we see price head up higher and start removing supply zones, and then eventually, yeah, that could happen. Is it likely? No, it's not likely. Okay? And when you do this long enough, you will start being able to determine in your mind, you'll start being able to calculate what the chances are. Okay? So if I had to say, what are the chances that price ends up over the, long term, many months, many weeks, many months, what are the chances that price drops from this area? I would say about 70% chance. Okay? What are the chances that it ends up doing this? 30% chance. That's where things are at right now. And if you're the type of trader that, likes to take 70% trades, and risk, knowing that there aren't strong chart signals to tell us that price is going to go lower. If you wanted to get into a trade early based on these calculations, you could, but you just have to know if price doesn't go straight down from where it is right now, where is it going to sit between? Does. Okay? That's what you got to know. You got to know what is the highest spot on the charts that price will likely not go above. And then you have to come to, a conclusion as to why. Why is that? What's the logical explanation for you selecting this area as being the area that price will not go higher than? Because if you're going to get into a short position and you're going to put your stop loss here, okay, you have to have a good reason why you believe price isn't going to go higher than that. And it has to make sense. Based on what's taking place in the markets, it has to make sense. If it makes sense, then by all means, enter into your short positions with your stop loss above there, because it could work out very well for you. Okay, if we look at the charts and we just zoom out a bit, we were looking at this. Let me just take a look. That's the daily down there, just doing some calculations here. Let me see, that's the weekly. 3. So the bottom, okay. So let's open this back up again. So let's say you wanted to get into a short position, and you put your stop loss right here. And you worked it out that this was a solid place that you believed the institutions would not take price higher. I mean, just by looking at this chart right now, one of the things that I would say is that when you're looking and examining price, we had multiple areas of supply that were formed. Okay? We had one here, we had a second one here, we had a third one here, fourth one here, and now a fifth one right here. Okay? 5 areas of supply that the institutions created as price was declining from the highs. So by examining these areas of supply, what would be the conclusion that we could come to? Excuse me. Well, one of the conclusions we can come to is we would look at these supply zones and say, were any of these supply zones removed? Well, let's put a check mark behind the ones that held. Top one, did it hold? Yes. Second one, did it hold? Yes. Third one, did it hold? Yes. Fourth one, did it hold? Yes. So out of 5, 4 of them held. What do you think would happen with the fifth one if price was to retrace up to it? Good odds that it will hold. Very good odds that it would hold. Okay? Because of what we're seeing with price, we're seeing failed moves to the upside, failed upward structures being created. So with all these failed upward structures being created, and every single supply zone that was created has held, you can safely come to a conclusion that the fifth one is likely going to hold. So that would be one of the very strong reasons why you would want to put a stop loss above there. So let's say you started getting into short positions now, and you put your stop loss above there. Our targets would be somewhere down in this area here. Down here. This would be our targets. Okay? And so that's a good area. That's a good move all the way down there. We could definitely see price do that. Okay? So this would be a way that we would structure a trade. But we'd know many things. Number one, has there been a very strong chart signal to go short? No, there hasn't. So if there isn't a chart signal indicating to us that price is going to be heading lower, we have to structure a trade based on logic. And so this is one of the types of trades that you could take based on logic, is examining the charts, seeing that price is likely going to go lower. All right, so if you're going to get in, where's your stop loss going to be and why? So we've determined that. So you put your stop loss there, you get into short positions, and as price plays out in your favor, you can continue to add in short positions until your targets get hit. Okay? But you have to understand the risks, like I said, and you have to have a good logical reason for taking the trade that you're going to take. So I think something like this would be decent. Now, would I take a trade like this? I personally don't like taking trades like this. There are times where I would use logic to enter into trades. I've done that numerous times. But for this type of chart formation, I'd much prefer to wait on the sidelines for chart signals to enter into trades. That's just me personally. But many of you don't have the patience like I do. Okay, and you may be looking for shorter term trades. And that's fine. There's nothing wrong with that. But just know what the risks are. There are risks when wanting to be involved in the markets very often. All right. So just a breakdown of that. So let's keep an eye on that. Let's keep an eye on that and see how this plays out. And if it does play out to the downside and that supply is held, then we learn something from it. Then we know that the logic and reasoning that we applied to analyze the chart is correct. And that's extremely valuable. Okay? Being able to substantiate your reasoning and your logic when examining a chart, in my experience, is everything. Because if we are proven right, then we build our knowledge base. We build the understanding of how the market works and why it should work the way it does. If it doesn't work out and price heads up higher, and it removes that area, then it is up to us to determine why that did take place, what it was that we were looking at before, what did we miss, and why did price eventually go higher. So then we add that information to our knowledge base, so next time when you're examining a chart, you can take into consideration what we've learned from this experience here. Okay? So if you have any questions, or if you haven't hit the like button, please do that. I always appreciate the like buttons. I get more people viewing, and I get more people to come to the channel and see what it is that we're teaching when you guys show your support. So I would appreciate that. So if you have any questions, let me know. Otherwise, we'll wrap it up for today. I think that was some valuable information there to pass on to you. And like I said, I just want to keep track of this. Let's just keep track of it and learn from it. We can have this as a learning experience for the both of us, not just for me. These are things that I do on my own, whether or not, people are watching. Okay? I do this for myself every single day. This is what I do. I analyze the charts, I examine them, and even though there aren't any very specific chart signals telling me what price is going to do, it doesn't matter. I still pay attention. I still watch. This is what I do. This is my love for trading. Okay? This is one of the reasons why I love trading so much, is because I love solving problems. I love examining a puzzle and solving it. And for me, the markets are the greatest puzzle. Okay? It is the greatest puzzle because I get to look at it, figure it out, and then come to my conclusions. And then it's just a matter of time until I see whether I'm correct or not. Like the market works in phases. I may make a forecast now, and it'll take a week, 2 weeks, 3 weeks, depending on the time frames I'm examining price action. And then I'll see the result of my analysis. So this is what I do. And through this constant process that I'm going through, my knowledge base of what I know to be true about the markets continues to be added. It just keeps on growing and growing. And that is why I can get to a point where I'm extremely comfortable with how I trade. I'm extremely comfortable with the analysis, and I'm very patient with my trades, holding my trades, and very patient with waiting for chart signals. Okay? So if you have any questions, let me know. I'll pause for a little bit and see if you have any questions. And if not, I will let you go on with your days. Gert writes, Aussie CAD, Aussie expected to weaken and CAD to strengthen once US CAD supply is reached. Ideal setup? Yeah, well, the Aussie CAD is not an ideal setup to get into a trade. I mean, if you were already committed to it, then we would be examining the Aussie weakness, the strength, and the CAD that we're watching for to support the ongoing trade. But I wouldn't be eager to be opening up trades based on that. How often do you normally provide per week? How often do you normally provide per week in the school? I'm assuming you're speaking about trade signals. It all depends on the market. We could have weeks where there's 2, 3, 4 trading signals that are coming out. And there could be weeks where there's no trading signals. It's not up to, I don't set a limit of how many trade signals I'm going to be pumping out. I only pump out if there's something there. Okay? Because I'm watching the markets to see what the banks are doing. If the banks are saying we're taking price higher, then that's a chart signal. The charts will tell me. If the chart tells me they're going higher, then that's a signal. But if the charts don't do that, then there's no signal. When price consolidates on higher time frames, guess what? Price doesn't go anywhere. There's no chart signals, okay? Because there's no momentum. When price is consolidating, it's range bound. It goes a little bit up, it goes a little bit down. It goes a little bit up, and then it goes a little bit down. There's nothing there. So, if you like to trade ranges, great, but that's not going to work out for you over the long term. Many traders have already experienced that. So I don't trade those type of charts. I like to know that the banks are coming in, buying something, and they're shooting it to the moon. And there's going to be momentum. That to me is what I like to trade, because you can get into multiple positions, you can make really good returns, and it's stress-free. So it all depends. If there's chart signals, great. If there's not, I won't post them. So if you come to the school, what you're coming for is you want to learn how to do the supply and demand analysis on the charts. Okay? The system that we teach here, I've called it the Sherlock system. It incorporates 3 different parts. Okay? One is doing the analysis, one is doing forecasting, and the other one is the chart signals, looking for the trading, the setups. Okay? The analysis is to be able to locate supply and demand from the banks, to locate the trend lines from the banks, to be able to determine if they're building trends, if they're destroying trends, if they're putting price into consolidation, what it means, all of that stuff. Okay? The forecasting is looking at the charts, the multiple time frames, and being able to determine where price is going to go, just like what we're doing today, right? And the last portion of it is locating the trades. How do we know that price is going to go higher? How do we know where to enter on the charts? How do we know what we have to wait for in order to enter into a trade? So that's what you should be focused on. Too many people come, they're like, well, I just want trade signals. Well, if you want just trade signals and you want 15 of them a week, this is not the place to come to. There's hundreds of other places that will do that, and you're more than welcome to go there and see what they have to offer. But over the long period of time, that type of trading doesn't usually last. There's very few people that can trade that often and be successful. Very, very few people that I've ever seen. And most of you already know that. The thing is, you have to learn the system, learn the concepts, the principles, the understanding. And then if you're the type of guy that likes many trades, then apply that system to the charts. Because you could be looking at, a daily, a 4-hour, a 1-hour, a 15-minute chart and applying the principles that we teach to those charts. And be day trading if that's what you want, and take as many trades as you want. But for me, I don't like trading that often. I don't like looking for setups every single day unless they're there. If they're there, beautiful. Then I'll take multiple trades. And that has happened. Just recently we had a string of trades that chart signals that we had. And they've done extremely well because they were high odds, the momentum was there, and we didn't have to think twice about it. Okay, so that's how it works. And again, you can apply that to whatever time frames you want to trade, if that's what you want to do. That's not how I trade. I don't like shorter term trades every single day and being forced to find trades, because at the end of the day, it's not going to work out very well for you. You have to understand the context of price, and if it's not favorable for momentum, then you're just really putting a lot of money at risk, because you're going to take a loser, and then you're going to get emotionally involved, and you're going to take a revenge trade, then it's just going to snowball. And then when the markets are set and are ready for momentum, you're going to have this whole feeling of being obliterated and taking wrong trades and no confidence, and then you won't take advantage of the good trading opportunities. So that is what I always stress here at the school. Okay, focus on the learning, focus on that, and then everything else will. All right, what are we at? 45 minutes. Yeah, we've gone longer than I wanted to, so I hope that was helpful. Let's keep an eye on gold. Okay, let's keep an eye on what we spoke about, and let's see how it plays out. Be very interesting to see. All right, and if you guys need me, you know where to find me. We have lots of information on our website that you can look at. And until then, until tomorrow, enjoy the rest of your day. All right, take care, everybody.